Let's begin on slide 1. Earnings per share, or EPS, your essential guide to company profitability. Before we go anywhere, pause and think. When you look at a stock price, do you actually know what you're paying for? EPS answers that quietly powerful question. It asks, how much profit belongs to one share? That Benjamin Graham quote on this slide, "The market as a weighing machine," sets the mood. Prices jump around, but earnings do the real weighing over time. If you've ever chased a hot stock without understanding its earnings, this deck is here to steady your hand. And remember, the PDF handout is linked below for later review. Moving to slide 2, what we'll explore. We're laying out a simple path. First, what EPS actually measures. Then, basic versus diluted EPS. After that, how EPS feeds valuation, where it can mislead, and finally, how to use it wisely. Notice the progression. This isn't random. We're going from definition to depth to judgment. Ask yourself, which of these steps do you usually skip? Many people jump straight to valuation and miss the foundation. That's where mistakes sneak in. Now slide 3, why EPS exists. EPS was created to answer one simple investor question. How much profit belongs to me? Not to the whole company, to one share. That's powerful because it personalizes performance. Without EPS, profits feel abstract. With EPS, they're relatable. Think about the last earnings report you glanced at. Did you notice the net income headline but ignore EPS? If so, you were looking at the crowd view, not the owner view. This slide sets the reason EPS matters at all. On to slide 4, what EPS is. The first point, net profit allocated per share. In plain terms, EPS slices the company's profit into equal ownership pieces. Second, it's a profitability lens, not a price signal. This matters. EPS tells you what exists, not what to pay. Many investors confuse the two. Third, EPS is the foundation for valuation ratios like PE. Building on the why from the last slide, this clarifies the what. If you've ever relied on PE without understanding EPS, that's like judging fuel efficiency without knowing how much fuel is in the tank. Turning to slide 5, basic EPS. Basic EPS uses current shares only, no future possibilities, no what-ifs. That's why it reflects realized earnings, profits that already belong to existing shareholders. This simplicity is its strength. Peter Lynch favored understandable metrics because clarity beats cleverness. Ask yourself, when comparing two companies, do you check whether their EPS growth is steady or just flashy for 1 year? Basic EPS helps you spot consistency, which markets reward over time. Now slide 6, diluted EPS. Here we add humility. Diluted EPS assumes options and convertibles actually turn into shares. In other words, your slice might get thinner. This shows worst-case ownership, which is crucial for growth companies that pay heavily in stock options. This builds directly on the previous slide. Basic EPS shows today, diluted EPS shows tomorrow's risk. If you ignore dilution, you may be overestimating your future claim. Ask yourself, do you get surprised when earnings look good, but your ownership still feels weaker? Dilution is often why. Next is slide 7, how EPS is calculated. Start with net income. Then subtract preferred dividends because common shareholders come last. Finally, divide by weighted shares, not just the ending share count. That weighting step trips many people up. Shares change during the year, so timing matters. This slide builds technical confidence. Have you ever trusted an EPS number without knowing how it was built? That's common and risky. Once you calculate EPS once yourself, financial statements stop feeling mysterious. Moving into slide 8, EPN valuation. EPS feeds directly into the PE ratio. Growing EPS can justify higher valuations. Stagnant EPS usually caps upside. This slide connects earnings to market behavior. Benjamin Graham emphasized this link decades ago, and it still holds. Think about a stock you sold too early. Was EPS still rising when you exited? If so, price likely followed later. EPS doesn't move markets instantly, but it quietly sets the ceiling and the floor. Now slide 9, what EPS signals? EPS reflects operational efficiency, how well the company turns effort into profit. It signals capital discipline, whether management grows earnings without excessive dilution. And most importantly, it hints at compounding power. This builds on valuation by asking why EPS grows. Look at companies like Apple or Amazon. Long stretches of EPS growth told the real story before headlines did. Ask yourself, are you watching earnings trends or reacting to news flashes? On to slide 10, where EPS can mislead. This is the caution slide. Buybacks can inflate EPS without improving the business. One-time gains can distort trends, and EPS ignores debt and cash flow. Howard Schillet warns that earnings can be polished. This slide balances the optimism from earlier. If you've ever felt confident about a stock because EPS jumped only to be disappointed later, this is why. EPS is powerful, but only when you ask how it improved. Now, slide 11, how to use EPS wisely. Track EPS over 5 to 10 years. Compare basic and diluted numbers. Widening gaps deserve attention. Pair EPS with free cash flow for reality checks. This slide turns insight into habit. Ask yourself, do you review earnings trends regularly or only during earnings season hype? Consistency here fixes many silent investing mistakes. Next, slide 12, a question worth sitting with. If prices disappeared tomorrow, would this company's earnings still excite you? This question forces ownership thinking. It strips away charts and noise. Be honest. How often do you anchor on price instead of business performance? If this question feels uncomfortable, that's useful data. Discomfort often points to where growth is needed. Finally, slide 13. EPS properly understood. Simple. Powerful. Incomplete on its own. EPS works best with patience and context. Peter Lynch's reminder, stock prices follow earnings, brings us full circle to the opening quote. Earnings weigh more than votes over time. If this walkthrough helped you see EPS more clearly, revisit the PDF linked below and apply it to one stock this week. And if this kind of calm, practical investing thinking resonates with you, subscribe to the channel. More guides like this are coming.